Hello everyone, welcome to Quantsapp. My name is Dharmendra. Today we are going to talk about are the option buys are profitable or not. Okay, we will discuss in details that how option buys are in losses and how we can rectify it. Okay, we'll talk about in details. All right. So I will give you just 3 points. Okay, just you have to focus on 3 points, and according to that we will discuss whether they can be profitable or not. Okay. So yeah, let's go to the board. And here just a minute, our option bias profitable? This is the question. All right. See, most of the option bias, okay, most of the option bias, where they are lagging. All right, we will discuss where they are lagging. Then we will discuss how we can rectify that mistake. Okay, we have to follow only 3 rules. We have to follow only three rules to become a profitable. Okay, first one, most important is strategy. Okay, now this strategy can be of two things. Either you can go for the option strategy or you can go for the underlying asset strategy. Okay, sometimes you have to go in both ways because the market is sideways. Okay, if the market is sideways, the underlying strategy will also not work, so there the option strategy will work. Okay, so I'll discuss how we can develop an option strategy and how we can develop an option strategy. All right, sorry, underlying strategy and option strategies. Okay, so here most of the people they failed, okay, they failed to develop a strategy. They fail to develop a strategy. Okay, because what they do, they start trading on the basis of just they see the random market. Okay, they think it might come down. If I had reached to the upper side, they think it will come down, so I'll buy the put option, or it has gone too downside, so I'll buy the call option and I will be profitable. Okay, that doesn't work because without planning, okay, without strategy, we cannot be in profit unless we develop a strategy. Okay, so here most of the option buyers, they fail to develop strategy. Okay, they fail to develop strategy. There are numerous indicators, and on the basis of that they do the trading. See, indicators are not bad thing, they act as a support system. All right, but we have to do some improvement, we have to do some settings. Okay, then we have to do back testing and paper trading. Okay, so once you develop the strategy, we have to do the back testing and paper trading. All right, so here they fail to develop the strategy. Okay, when they fail to develop the strategy, they go on tips provider. Okay, so there are a lot of traders. Okay, there are a lot of fake traders also. Okay, they provide the tips. Okay, just imagine if they are providing the tips, why can they be more profitable without providing the tips? Okay, so they are providing the tips and most of the people fell into that trap because on the basis of tips. Okay, because on the basis of tips, most of the traders, they trade heavily. Okay, they just put a huge amount of quantity, and whenever there are losses, they will almost in 2-3 trades or maybe 5 to 6 trades, the whole capital gets wiped out. Okay, so that is the problem. Okay, the tip providers, okay, most of them scammers. So due to tips providers also, option buyers are in losses. Okay, so when it comes to strategy, people fail to develop strategy first of all. Okay, then tips provider, they work on the tips. All right, now second one, risk management. Okay, I am writing in short form, risk management. Okay, do all traders work on risk management? All option buyers works on risk management? Not at all. Okay, the reason is that people think stock market as a lottery system. Okay, they think just they can enter into the stock, enter into the trade, and they make a lot of money. Okay, so what they do, they just bring huge capital like 5 lakh or 10 lakh rupees. All right, and they start trading with the heavy quantity. Okay, without proper risk management. They start trading with the heavy quantity without risk management, without stop loss, without support system, and they make huge losses. Okay, so when we talk about risk management, what are the important points? First, okay, first if I want to talk about, that will be capital protection. Capital protection. How we can do that? SL, okay, target. SL means stop loss, target, and you can see when you are doing when you are doing capital protection. So here what we have to do, first is capital protection. Under capital protection, stop loss, maintenance of stop loss is important, then target. Then here I want to talk about how much capital you should use. So I can say 1/3, okay, or if you are the beginning, then 1/4, okay, 1/4. You have to do that, okay. So in risk management, most important is capital protection, okay. Then we go with the stop loss, target, and then we'll go with also how much capital we should go with, okay. So first one is capital protection. Second, here I want to talk about whether you should go for derivatives trading or you should go for stock trading directly into the cash market. That depends, okay, that depends on your risk appetite, okay. So when you are talking about capital protection, so I'm talking about that how much capital you want to induce, okay. Then second point under risk management, first you should go with the cash trading, that means stocks, okay. Then afterwards you can go with the derivatives trading after thorough study, okay. We cannot enter into directly into derivatives trading, okay. We should not go with that. First start with stock trading, start with less quantity, then only we can be profitable, okay. So here I have talked about risk management. Now I'll go with the third point, okay. Third point is most important, number of trades. Number of trades, that comes under psychology part of the trading, okay. I've explained what are the psychology part in my earlier videos, okay. Now here what I want to show you, okay, it's really important because see most of the traders what they do, they think that every trade is an opportunity. Of course it's an opportunity, okay, of course it's an opportunity, every trade is an opportunity, all right. But whether we should go for every trade or not, that is our part, okay. Let's just say in a day there are like 3 to 4 trades, okay, just give an example, okay, 3 to 4 trades are there. So should we go for all 3 to 4 trades? Not at all, okay. The reason is that we cannot be 100% sure about every strategy, we cannot be 100% sure about every trade, okay, because there will be a times when you are making huge losses, okay. So in that case, let's just say there are 3 trades coming every day, okay. Let's just say on the first trade you have made profit, okay. So can you go for the second and third trade? In my experience, no, not at all, because I want to be profitable. I want to be profitable at the end of the month, okay. So what will I do? I'll set my target according to the trades. If I'll go for the 3 trades, okay, I'll be too much profitable, okay. But that doesn't happen because we cannot outperform market every time, okay. So here there are 3 trades, okay. Let's just say on the first trade you have made the profits. I think it is well enough, so you can close that trade, okay. You should not go for second or third trade. But if the first trade is in the losses, try to take the second trade, okay, or the third trade, okay, but not with the purpose of covering the loss, never, okay, because if you keep that purpose in your mind, you will make another losses. See what people do. Let's just say here in the bank nifty I bought 10 lots, okay, I bought 10 lots, that means 150 quantity. and I have made losses about 50 points, means 7,500. So what most people do when they go for the next trade, that is second one, okay, what they do, they just double this lot, okay, they just double it out, means instead of 10 lots they go for 20 lots, they go for 20 lots in order to be more profitable. That is the most I can say you can the wrong decision in this stock trading, okay, because here he is going for what like whichever trader is here, whoever the trade is here what they do, they go for the double lots, okay, and here if the second stop loss hits you, okay, then your loss will be triple, okay. Initially let's just say you have lost around 50 points, so 7,500. Now here it is 50 points on double lot, that means 15,000. Total loss will be 22,500, okay, in a single day. So that is the most important thing. See here if in 10 lot I have made the losses of 7,500. Let's just say second stop loss also got hit, so I am making losses around 15,000. Okay, that's it. I will close the trade. Okay, today is not the day for me. What I'll do, I'll wait for the next day. See, it will take 2 trades to cover that loss, but the losses I have made over here, it will take 3 days. Okay, 3 trades. So here is the problem, the psychological effect. Okay, what people think that I will double the lot and I will recover the amount also and I'll be profitable also. Okay, that is the most stupid decision. Okay, we should not go for that. You should look to be profitable. You should look how can it be profitable. First, most important thing is whenever you are going for the trades, okay, just think about the setups. Is it giving you 70% strike ratio? Then you can go ahead. All right. If the ratio is come, one trade is enough. You are making one trade is in one trade your losses. Don't go for the second trade. Close it. Go for next day. Okay. This is how you can be profitable. Now, don't be here most people become greedy. Okay, don't become that. They target like, okay, I will achieve 10% return in a day. That is not possible all the time. Here you are making 10% a day, you are also losing 10% a day. Okay, it goes both ways. So be a realistic approach. Okay, a realistic approach will help you a lot. All right. So here we have talked about 3 points. Okay, strategy, risk management and number of trades. Okay, so let's solve each point. Okay, first one, strategy. Okay, now if I am going for the strategy, I need data. Okay, let's just say I am going for the intraday trading. Okay, so in intraday trading I should look for the strong support and resistance, and whenever there is a breakout I can take the trade. Okay, breakout or breakdown, take the trade with the support system from the data. Okay, how can it be achievable? Okay, I can use the Quantsapp tool, all right, for the intraday and for position also. Okay, that is the strategy. That is a strategy for underlying asset. I will also show you what strategy I can use for the options also. All right. So here what I'll do, I'll go to track. Under options OI, I can select the triggers. Now the trigger tool will help you out, okay, to do the intraday trading in stock options. Okay, at this center you can see all the stocks, and below them the number which are mentioned, it is the future price. Okay, so at this is the strike on the on my right hand side. This is known as the resistance, because at this particular strike highest number of call option writers have made their position, so it will act as a strong resistance. So whenever there is a breakout, I can go with the call option buying. Okay, I have made the detailed video on the triggers tool, you can look for them. All right, here also on my left hand side you can see this strike is a support level, that means highest number of put writers have made their position. So whenever this level has been broken down, I can go ahead with the downside trade. Okay, I can buy the put option and hold it for few few minutes, and I can make a huge profit. Okay, so here why I am showing you this tool, because this tool works totally on the data. Okay, then you can apply your technique, then you can apply the indicators on the charts. Okay, and you can see if there is a support system and also the future data is backing, okay, you can go ahead with the trade. So for the future data, I can go into the track and select the built up script symbol, okay. So under built up script symbol, here you can see you will have all the stocks, and here the narration will come out, okay. Right now the narration is not giving you, narration is not here, okay. So in the live market it will show you, okay, is there any long built up or short built up in that particular stock or not. So if there is a resistance breakout, look for the long built up in that particular stock. If there is a support breakdown, look for the short built up in that particular stock, and you can take the trade according to that, okay. So this is the setup, okay, strategy for the underlying asset. All right, now I will show you strategy for the options, okay. So go to trading, go to strategy builder, select option architect. You can see there are numerous strategies, okay. Here you can see 9 strategies are there. If you are bullish, it will give you bullish strategy. If you are bearish, it will give you bearish strategy. If the market is sideways, okay, you can go with the oscillate. So you can see you will get this kind of strategy. Select any strategy, okay. So it will give you the strikes, okay. It will give you the strikes, at which strike you should buy. You will see the entry price also. You will see the lot size also, and here you can see how much profitable you will be if the bank nifty moves on the either direction, okay. By adjusting the strike, adjusting the option, adjusting the price, you can be profitable. You can build your strategy over here, okay. So first problem is solved, okay, strategy builder, okay. Now second one is risk management, okay. Risk management, pardon my spelling. So here first one, maintain stop loss, maintain target, don't be greedy, okay. If the target is 1:2, go for 1:2, all right. If you want to do the trailing, you can do the trailing, all right, but in the beginning maintain target, all right. Now capital, go with the 1/4, okay, 1/4 of the capital, all right. That means if you have like 5 lakh rupees, you can go ahead with the 1,25,000, okay, out of 5 lakh, okay. So this is how you are going to do the trading by managing the risks, okay. So maintain the stop loss. Stop loss can be on the basis of data, okay. Use the open interest, okay, use the option chain, and according to the data you can maintain your stop loss, or use the chart pattern, maintain the latest swing, okay, swing low, swing high, and there you can maintain the stop loss, or you can go with the support and resistance, all right. So stop loss is solved, target is solved, and capital also. Now third one, okay, third one I was talking about number of trades, okay. Number of trades. So here first avoid, okay, avoid over trading, avoid over trading, avoid averaging out, avoid impulsive decision, okay. If you avoid these 3 things, you can be profitable, all right. That is the only criteria while going for the number of trades, okay. Most of the people do huge number of trades, okay. They think they will capture every opportunity, but it doesn't work like that, okay. So be specific, be disciplined, all right. Go with few number of trades and be profitable, okay. Don't do over trading, okay. Don't go on the tips, all right. Don't go on the tips, and always maintain your capital, okay. Go with the 1/4 of your capital. Don't don't deploy all of the amount, okay. You will win losses, all right. So here I have talked about intraday trading setup. I have talked about option strategies, okay. Now here if I'll go into the trading, I can select the trap indicators, and also I can select the relative performance graph for the you can say positional trading. So here you will get the signal, put at a trap and call at a trap. Put at a traps means there is a bearish signal, means the particular stock can go down. Call at a trap means the particular stock can go up. So here the signals will be generated, and you can see at which stock the signals has been generated. Analyze that particular stock, analyze the trend using the future built up, okay, future historical data, and you can use the PCR data, and then you can go ahead with the trade, okay. So this is about trap indicator. You can find the trap indicator in details in the videos, okay. So this is how you can do the option, this is how you can do the position trading, okay. Now to put the stop loss, okay, you can see under trading quant model, stop and target and optimal stop and target, all right. So okay, so your data is not available right now because market is closed. Let's just say stop and target. So here about every particular stock, bank nifty and nifty, it will give you upper bound level, okay, and it will give you lower bound level. So these levels will act as a resistance and support. So you can place the stop loss and target over here, okay. So we have discussed whether the option buyer can be profitable or not. Yes, they can be profitable. So build your strategy, test your strategy, back test it, okay, using the option architect tool, all right. So you can build your strategy, you can build your option strategy. Second one, I have talked about risk management. Stop loss, target is crucial, okay, and how much capital you want to deploy, that is also crucial. Then third I want to talk about is number of trades. So just keep a number of trades low, okay, so that you can be more profitable. Don't go with the impulsive decision, don't go with the tips, okay. So this is all about whether option buyers can be profitable or not. You can call on the number mentioned above, and you can learn about the Quantsapp tool. This is Dharmendra Rajbhar. Thank you very much.